everybody, what's up? It is Wednesday, February 17th. Markets took a little breather today, although the Dow was up. Actually, today was a pretty good day. I did not have any significant support for the NASDAQ until much lower levels. And the comeback on that thing, even though we ended up negative close for the day, I mean the comeback off of the lows, the rally off of the lows, that was a strong performance. Fiscal is very, very strong. Very strong. Up 650 billion year over year. I mean that is huge. Growing spending growth rate 35% year over year. You see employment and withholding tax deposits, which I like to look at as a barometer for the labor market. That just continues to trend higher. So that's a good sign. We saw very strong retail sales today. The deficit, all right, which is the net addition to the financial balances of the non-government, that's us, the economy, that's at already at 965 billion. I mean, we could hit $1 trillion on the deficit by the end of this week. And you're probably going to hear a lot of screaming and hand wringing about that. Oh my God, the deficit, the deficit. But remember, the government deficit equates to exactly the addition to the financial balances of the non-government. That's us. That's national savings. Unfortunately, it's not all distributed equally. I always throw that in there as a disclaimer. If I was in charge, I would make it more equitable for everybody, but I am not in charge. Bitcoin, hey, 52,000 plus. Look, I think, as crazy as this might sound, I think Bitcoin is accurately reflecting, the stuff that I talked about the other day, which is this desire to move away from the dollar because of policy, U.S. policy, which in effect is like weaponizing the dollar, keeping people or countries or institutions or companies, blocking them from the dollar-based global financial system. And that is a clear set of policies that have been in place. And somebody said here, come on, Mike, that wasn't all Trump. And you're right, that got going. Obama was a big user of those kinds of policies, sanctions and whatever. So you're right. I mean, and it probably even predates Obama. But there's no question about it. But it has accelerated in the last 4 years. There's no sign from the Biden administration that these policies are going to be reversed. And like I said yesterday, the world doesn't want to move off of the dollar. I mean, that is a time-tested, seamless, robust system of transaction and clearing and commerce and trade. But we're forcing that to happen. So, I mean, we're leaving the rest of the world, a growing percentage actually of the rest of the world, with no other alternative but to do that. So I mean that's just going to happen. So what about gold? Why is gold? That might be a question in a lot of your minds. Why is gold so weak? I mean, we see Bitcoin going up every single day. Gold's going down. Hey Mike, if there's this inflation impulse going on, if they're printing money, if they're printing so much money, why is gold going down? If you ask that question, you haven't been trading for very long. Or if you have, you have a really, really short-term time frame, or your focus is entirely price, as if price really tells you anything. Fundamental conditions remain longer-term bullish. Now, I've been saying that we see now that gold producers have been sellers in rallies. So they're capping the gold price because they're hedging. They're selling futures every time gold rallies. But by the same token, they've been buyers on the dips. So like, you know, we're locked in this trading range. This is a consolidation phase. I mean, we had a big move, which basically peaked out last August over, what did we get up to, like 2,000 something? I forget what the high, maybe it was like 2,130 or something like that. And now we've been in this consolidation phase for, you know what, 6 months. And that's what it is. It doesn't represent an end to the gold price rally. It does show that producers see the price at this level as somewhat being a fair price. They're looking to lock in profits. You see an increase in hedging up here. So it's going to stay stuck in this range for a while. And when you see dips, the producers have been buyers. But looking at the bigger picture, when you look at the fiscal expansion, when you look at the rate of spending and the fact that more is coming, I mean, it's just a matter of time until we see gold rise out of this consolidation. I mean, I can't put a time frame on it. I understand what's happening right now in the sense of, you know, kind of why it's going sideways, why it's languishing, and I just explained that because of producer selling. But ultimately, you know, the weaker dollar, which is something we're definitely going to see, fear or actuality of rising inflation, it'll push gold higher. Just got to be patient. And let me just end on that point of the dollar, that you could make the same argument, like, why is the dollar stable right here? Well, I've said so many times that the dollar's downtrend is a very slow-moving downtrend. There are factors that are mitigating the dollar's decline. One of those being Fed monetary policy, you know, low interest rates, asset purchases. Those things are bullish for the dollar. I made a comment yesterday in my video about the British pound. I mean, this is a very interesting setup where the Bank of England almost, you know, on a regular basis talking about or hinting about moving to negative interest rates. And I said, if that happens, if the Bank of England goes to negative interest rates like Japan and Switzerland, the pound will be as strong as the yen and the Swiss franc. So I'm positioned bullish in the pound. I suspect at some point, maybe very soon, the Bank of England will go negative and we'll just be in a long-term uptrend in the British pound. And it's going to be fun because everyone's going to sell the pound when they announce that, and I'll just be there, you know, buying it like crazy. Hey, the new episode of my podcast is out today. Go to the link right here in the description below and check it out. A lot of interesting stuff. See you tomorrow. Bye-bye.